Ladies and gentlemen, welcome back to another video. I'm your host, the Dividend Aristocrat, and today I'm going to be talking about all the dividend income that I received for the month of February. As always, before we get into the dividend information, let's take a look at my portfolio real quick. So for my total invested, I put in $28,447. And with that recent rally we've been seeing in the market, I'm actually sitting at a total portfolio value of $36,255, which is amazing. That puts my unrealized gain at $7,808 and my total return at 27.45%. This is by far the highest my portfolio's ever been, and I would love for it to stay this way, but I won't be surprised if we see a correction coming soon. In regards to the dividend itself, it hasn't changed too much yet. Next month is my big month, but it is sitting at $784.13, and my yearly projected income, that's my dividend income for the year, is $677.83. As I keep reinvesting my dividends this year and investing into new companies, this yearly projected income will grow, but not all of it might be realized this year. My portfolio yield is currently sitting at 1.87%, which is really nice. It's right where I like to have it. I just want to emphasize that because I've been getting a lot of questions recently about why my dividend yield is not higher for my portfolio since I am a dividend investor. I just want to remind you guys that my current goal with investing is to maximize my total return. So for me, a slightly lower dividend yield and higher prospective growth rates actually works better for what I'm looking for. Now over time, my dividends will continue to grow and I might start moving into higher yielding positions as I get further down my horizon. But currently, a lower dividend yield for me is preferable, and I also do have some positions that don't pay a dividend yield at all, but overall, I do prefer companies which pay a consistent growing dividend because I think that is a better representation of how they're going to perform in the future. My yield on cost is sitting higher at 2.38%, and that's because of the price appreciation, of course. And taking a look at the table I have right here, we can see how much I've invested every year and how much dividends I've received so far. So you can see how quickly it's been growing from 2020 and 2024, the dividends and the amount invested. So I've been investing a lot more heavily these past couple of years. In 2023, I actually invested right under $10,000. So I had a bigger year in 2022, but I'm okay with that. My goal for this year, though, is to hit $12,000 invested for the full year. So right now I'm only 2 months in. I do have about $2,500 invested, which is totally fine, but I do want to take it easy going forward just so I can be ready for any opportunities that might arise. So I'm trying to build up a little bit of a cash position. And for the dividend received so far this year, it's only sitting at $48.25, but that's going to be increasing a lot as we saw. Our yearly projected income is sitting at $677. So I do expect it to be within that range by the end of this year. And if we do take a look right here, we can see that we're starting to amass a little bit of a dividend for 2024, but by the end of this year, it'll be significantly higher than the rest of them, so I'm really excited to see that. And I think with that, we can hop right into my dividend payments for this month. So just a quick glimpse of what we're going to be going over. These are my 5 dividend payments I received this month. And this statement right here just comes directly from my broker, Vanguard. The first payment I received this month comes from Lowe's, ticker symbol LOW. This was a fairly small dividend sitting at $2.22. I do own 2 shares of Lowe's, that's to be expected, and I reinvested it to get 0.01 shares of Lowe's back. Taking a look at the company's dividend stats, they have a pretty good dividend track record. The yield is sitting at 1.89%, which is nice, not too high. I like that a lot. Their pay ratio is sitting at a nice 32%. That's also pretty low, so it puts them in a comfortable position to continue growing these dividends, or at least hopefully not cut them. And their 5-year growth rate is sitting at a crazy 18.65%. Now going forward, I do expect seeing some lower dividend hikes like we saw in the previous year. So I wouldn't be surprised if this growth rate does continue to trend down these next couple years. But I do hope that they'll be focusing on growing these dividends for their shareholders. And with a dividend growth history of 60 years, I'm not too nervous about them cutting that. The next dividend payment I received is from General Dynamics, ticker symbol GD. They are a defense contractor within the military industrial complex, and they paid me a total of $2.67, which I reinvested back to get 0.01 shares of General Dynamics stock. I only hold 2 shares of General Dynamics, and I do wish I would have purchased more for my initial investment, but at the time I didn't have too much cash laying around, so I did only purchase a smaller amount. Their dividend stats are pretty solid, nothing crazy like what we saw with Lowe's, but I'm not too concerned. Their yield is at 1.93%, which is in the healthy range I like to see. Their pay ratio is a little higher, sitting at around 44%. Their 5-year growth rate is beating inflation by a nice margin at 7.26%, so I'm happy with that, though I would love to see some double-digit increases sooner or later. And their dividend growth history is at 29 years, making it a dividend aristocrat. I'm pretty confident they're going to continue growing this dividend for years to come, unless, of course, there's a significant setback to their business. Following that, I received a dividend from MasterCard in the amount of 0.66 cents. It's an extremely small dividend, always has been. I only own 1 share of MasterCard, and I reinvested it to get 0.001, but unfortunately, it's not a very significant reinvestment. Although I do drip the dividends, I don't think the size of my position here will ever pick up too fast. The price appreciation is great, but the dividends don't make up much, and unless they start increasing them even more aggressively than they have already, I don't see how I'm going to be picking up much more shares than what I currently have. Now I only own one share, and I would gladly pick up more, but at these prices, it seems a little bit rich for my liking. As you can see here, their dividend is super low at 0.56%. It was actually a decent chunk higher than this when I first purchased it, but since the price appreciation has significantly outpaced the dividend appreciation, it's basically cut my dividend yield in half. The pay ratio is under 20%, which is very healthy, meaning that if they want to continue growing these dividends, they probably have the ability to do so. And the 5-year growth rate is around 17%, and they're not really slowing down. Even their most recent dividend hike was extremely aggressive. I am very confident that MasterCard will continue rewarding their shareholders as much as they can with dividends and stock buybacks. Though I do think that if they start investing more into capex or research, they might have to lower the dividend increases by just a bit. The largest dividend I received this month is from one of my newest holdings, Texas Instruments. I built most of this position up in October when their price tanked a lot, all the way down to around $140. And my dividend this quarter was $18.36, so I reinvested it to get 0.116 of a share. Over time, this will definitely become a significant dividend snowball for me, and if the company continues down this path, I will definitely be holding onto this position, if not maybe even adding more. Looking at their dividend stats, they're sitting at a 3.18% dividend yield, which is a little bit higher than my other positions. The pay ratio is at 71%, which is higher than I like it, but they have been investing a lot into capex. Now, they did mention that all the investments they've been doing are going to be eating into their financials for a couple years, but I think once they're finished with that, they'll be sitting very nicely. Their 5-year growth rate is at 12.81%, but I do want to mention that their most recent years have actually been very underwhelming compared to this. Their dividend growth history is at 18 years, and I'm very excited for when they finally hit that Dividend Aristocrat status. And the last dividend payment I received this month is Apple. As always, it's one of my smallest dividends that I received. This one amounted to $2.17, and it's definitely a little bit bigger than the one I received for MasterCard because I do own a larger position of this company. Just like my other dividends, I reinvested this to purchase a bit more Apple shares in return. Looking at Apple, this one's a little bit tricky for me. It's one I've been a little bit underwhelmed by when it comes to dividend growth. Their yield is sitting very low at 0.53%. Their pay ratio is also sitting very low. And I think they have the ability to increase this dividend, but they've been focusing more on buybacks recently, which isn't the worst thing. The benefit of buybacks is they're not taxed the same way like our dividends will be taxed that we receive from the company. But I do like seeing that cash flow that these stocks are generating for me. So not getting increasing dividends doesn't feel great. Now I need to clarify, the dividends have been increasing, but they've just been increasing at a much slower rate. As you can see here, the 5-year growth rate is at 5.63%, and dividend growth history is sitting at 10 years. I do think they're going to continue increasing its dividend, but I do wish we saw dividend hikes more similar to Microsoft at around 10%. And real quick, I do think it'll be helpful to look at their total return versus the S&P 500. In this case, I'm using VOO to simulate the total return for that. So as you can see, for the past year, they've actually had a hard time keeping up with the market. The only one that significantly beat it out was MasterCard. The rest have actually trailed it by a decent margin, with Texas Instruments actually being in the negatives. Now looking at a 3-year time frame, we can actually see that General Dynamics ends up being the best performing company, followed by Apple, Lowe's, and then the market, and then MasterCard and Texas Instruments still trailing behind. So that's a little bit better of an image. And then the 5-year time frame, Apple absolutely destroys every single company here, and then followed by Lowe's, MasterCard, and then the market actually beats out General Dynamics, and Texas Instruments unfortunately comes out the loser once again at 75% return. Now over a longer period of time, these companies have actually outperformed the market. But with the recent bull market rally that we've seen in the market due to companies like Nvidia, Google, Apple, Microsoft, it's been outperforming a lot of different individual stocks. Now, I do want to mention that my largest holding in my portfolio is actually VOO. It's because I like to keep it balanced that way. I'm still trying to track the market, but I do like to diversify with some individual holdings. And if you guys are enjoying the video so far, feel free to leave a like. It helps out the channel a lot. And if you haven't subscribed to the channel yet, please do so. I do post videos every single Sunday. And taking a look at the holding tab of my portfolio real quick, we can see that my best performing stock is actually MasterCard, and then this is the order that they're in. Of course, Texas Instruments is at the bottom like we'd expect. But it is also my most recent purchase, so we'll see how it does play out in the long run. We can see here that for MasterCard, I am up 50%, Apple at 34.26%, General Dynamics at 32.55%, Lowe's at 21.79%, and Texas Instruments at a respectable 8%, especially since I bought this in October. Looking at dividend earned here, we can see how much I've earned in each position, with my highest being Texas Instruments, which makes sense since it is my largest position and highest payer of the bunch. And in these two columns, we can see the yearly dividend per share and our annual payout that we expect. This will be the total annual payout over all the shares. Now looking at the yield versus yield on cost, you can see here what I was talking about. Based on the price I bought MasterCard, my yield on cost is actually 0.78%, but now it's sitting significantly lower, and the same thing can be said for Apple. And for the allocation, here are the percentages of my portfolio. The only reason Apple is actually smaller than companies like Texas Instruments is because I bought it about a year earlier than Texas Instruments. So at the time, Apple was actually my largest individual holding. Hopping into my monthly breakdown tab, what it does is it takes the information from my order history tab and it distributes it here based on the month and year. So as you can see right here, in January I invested $2,500, and this month in February so far I've invested $0. I was trying to keep this a more laid back month when it comes to investing since my monthly goal is $1,000, so I want to get back on track and average out January over the next couple months. Now of course, if any good opportunities arise, I definitely will be jumping in, but at the moment I haven't seen anything significant. Over here, we can see how much I've been paid each month. So $22.17 in January, now $26.08 in February, but March is going to be an absolutely ridiculous month. And once that value gets put in there, then it actually auto-populates this graph. So as you can see here in February, it's $26.08, and that is significantly higher than last February, which was sitting at $2.64. So we've been making good progress on our dividend goals. And I always like to show you guys my order history tab just so you can get an idea of how this spreadsheet works. So what I do here is I manually enter in my dividend payment information, so the date, the ticker symbol, the quantity, and the total order. And the spreadsheet will take these values automatically and input them in other locations as I showed you guys earlier. So from this column right here, it is pulling that total amount received for dividends for the month of February. And since I recently posted a tutorial on how to make this future outlook calculator, which I'll make sure to link, I thought I'd show you guys one of the ways I like to use it. So right now my starting principal is my portfolio value, which is $36,255, and I'm planning on contributing $12,000 this year. My annual dividend yield is currently sitting at 1.87%, and I'm expecting my dividend increase to be 8% per year on average. This is of course very optimistic. Now for expected price appreciation, since we're going very optimistic on dividend increase, maybe we can lower that one a bit towards 8% price appreciation per year. And we can see the total value expected at year 40. So in this case, I'm expecting about $5.5 million portfolio value at the end of year 40. My dividend income per year at that point will be $67,000. And my total dividend earned by that point will be $800,000. Now, of course, if somebody's looking to make more dividends at a certain age, you can always have a higher portfolio yield later, but this is what mine simulates based on my current yield. All right, everybody, that does bring us to the end of today's video. I do hope you enjoyed seeing a bit of a look into my dividends received for February. Definitely let me know down below what dividends you received this month, and if you have any content you want to see on the channel in the future, make sure to comment that as well. If you guys have been considering investing into any REITs, especially realty income, make sure to check out the latest video I posted on my channel last week. It goes into a full depth analysis of realty income, and I talk about some of the points of why I love the stock, but also some of the problems I have with it as well. Other than that, don't forget to subscribe to the channel if you haven't already. Make sure you leave a like on this video, and I will see you in the next one.